Hello and welcome to Trending Treasury, the weekly webcast from Arling Close. This week we are very pleased to be joined by Laura and Chris from 3110. We'll be talking about how local authorities can invest in their local economy, how that agenda has started to really pick up recently, what local authorities are actually doing and how they're doing it and what they hope to achieve. So thanks very much for joining us. I hope you're both good. I suppose that probably the place to start, Chris, is give us a bit of background on 3110. So what is it you guys do?
Yeah, so for those who don't know 3110, we're a consultancy firm that work predominantly with local authorities, and I think the easiest way to say is we help support local authorities to make the best use of their assets and powers. I suppose, what does that mean? It means our work focuses on supporting local authorities to enable local growth, helping local authorities to lead collaboratively in their local economies, help them to embrace innovation and engage with communities. I think we tend to work with all tiers of local authorities and really focus on helping them to deliver their corporate plans and deliver what they feel is best for their communities. So just a quick introduction on me. I'm a director at 3110 and I, with a couple of others, started the business in 2015. My background is I'm a CITFA accountant and I've worked with local authorities since the start of my career. Laura, do you want to give a brief intro into you?
Yeah. Thanks, Stephen, for having us on today. So Laura Bridges, I'm also director at 3110 Consulting. My background is more directly in regeneration and property, and I've worked directly for a local authority for a number of years before starting at 3110. So I've got a good appreciation of how it works kind of on the inside foot, particularly in terms of governance and decision making, which we find really valuable in the work we're doing to support local authorities.
Great, well, thanks very much. I mean, to sort of crack on then, I mean, I suppose investing in the local economy can mean a lot of different things, but what we're here to talk about really is local authorities putting a scheme together to invest in their local area in a sort of a very direct and informal way. But is there sort of a history to this? Is this something new? Because obviously we hear a lot about them at the moment, but obviously these are these a brand new thing, or is this something where they've been going on for a while?
So what we're seeing really is a shift in focus, I think. So, councils have had a role in stimulating their local economy for a very long time, and traditionally they've done that using their borrowing powers for their own initiatives or to invest in their own assets, for example. But what we're beginning to see is a change in focus to kind of more external facing initiatives that look to support local businesses in their area, the creating jobs, and particularly kind of looking to maximise the impact of their investment in terms of place shaping and more directly on the communities in which they're based. And we're seeing a kind of thread of social value through all of that as well. So, it's not totally new, but I think there's certainly a different shift in the emphasis of it all.
Yeah, I think just to add to Laura, I think, as we say, what we're seeing a lot more of is that focus on communities. So looking at how can we best support the community, what are the needs of that community, and how can we best create jobs, how can we best create an environment which is good for living, working, playing, and how can we best attract other investors to kind of almost co-invest with us into creating better places. So that, as Laura says, there seems to be almost a change in focus to look more at the community and the place, rather than just the assets that we own and how they create good growth. Stephen, you're on mute.
It's interesting you say that there's been sort of a focus shift. That the idea that previously perhaps there was in the idea of investing in the local economy was almost an idea of the authority investing in itself, and now there's a bit more of almost a broadening out. I mean, when we think about that, and we're looking at trying to look at the community and, as you say, like more perhaps place I don't want to say place shaping because that sounds a bit too fixed asset-y, but sort of trying to shape the community a little bit more. I mean, if that's the way the focus is going, I mean, we can't get away from it. What's the impact that COVID has had and sort of coronavirus has had on those approaches? Has it sort of turbocharged it, or are people taking their eye off the ball, or what's been the impact of COVID on these sorts of schemes? Has it refocused them away, or has it just, you know, turbocharged what they were doing already?
Yeah, it's definitely a significant factor in, you know, the approach that's being taken at the moment. What we're seeing from our clients, I guess, is a bit of a concern that the broad range of government interventions that have been on offer to local businesses in their local community perhaps might have just cushioned or delayed the, you know, full impact of the pandemic, and there are concerns about, you know, a pending cliff edge in the availability of finance for local businesses, for example. I think we're also seeing that the pandemic is kind of seen as an opportunity and a catalyst for change. So a bit like what you said about the turbocharging, there's that real focus on kind of doing something slightly different, a bit more innovatively, that building back better thread, that, you know, you look to turn things slightly on its head and kind of give a bigger emphasis to supporting their local communities, both in terms of recovery, but I guess in terms of safeguarding kind of successful areas that are already located in their own communities, successful areas of growth. That's particularly what we're seeing.
Yeah, and I think it's almost a philosophical point, isn't it? I think you either get the view that actually, how do we come out of this this pandemic? Do we invest in good growth, and do we ride that wave, or do we really consolidate on what we've got and make sure that we've got resilience in the kind of core? So, you know, obviously we're talking about investment funds, the ones that we're seeing, you know, are really kind of identifying what makes their region, their area good, and really kind of focusing on that and making that better. You know, that we're seeing that as well. And I think, you know, you touched on it, Stephen, about you know, what does that actually mean in terms of, you know, you look at the towns funds, you look at the high street funds, you look at the levelling up agenda that's coming through from the government. It's all based on jobs and creating growth and creating good growth, and making the place, the environment, better and more conducive to you know, what communities want. So I think, you know, we're seeing, you know, in some respects local authorities react to that as well, in terms of, you know, recognising nationally what's coming down the line and really getting a head start on that.
Yeah, there must be quite a lot of regional variation in that case. If a lot of if most councils that are approaching this are looking at it thinking, well, okay, well, how do we make sure that what we're good at, can we continue with that, and then how do we develop it going forwards? A town in the northeast, or, as you know, sorry, a town, a council in the northeast is going to have very, very different views of what their area's strengths are compared to, say, a district council in the southwest, or a county council in the southwest. So there must be quite a lot of regional variation between the two, and what the actual focus that different councils have. Yeah,
I think there is, and I think, you know, recognising that the local people know best is you know, it's always been a kind of ethos of, you know, if people live there, they know what they want. I think that's really important. I think, you know, one of the things that we saw, you know, we've seen in, you know, from governments of the past is, you know, this constant, if you invest in assets, so invest in housing, investing in kind of, you know, physical assets, well, actually, you know, maybe the north sometimes gets left behind because the house prices aren't there. So, you know, it's all very well saying we'll give, you know, £100 million to invest in housing in London. You know, that £100 million doesn't necessarily turn a big scheme in the north viable. So being a lot more directive about, you know, investing in jobs and investing in good growth and investing in what your local community needs, you know, for us feels a kind of almost a better way of doing it than just having this kind of blanket, we will invest in houses. It's basically investing in what that area needs, and if that's houses, great. If it's not, if it's jobs, if it's that, then, you know, it gives you a more local tool to address those issues.
Yeah, and so thinking about that and sort of drawing on that thread a bit, maybe then, I mean, we've talked, I mean, to be honest, we've had guests on talking about these, not these sorts of schemes, but talking about how you can do a lot of these things. But we rarely get to talk about the what. You know, what sort of schemes do we see? You know, do you see authorities undertaking? You know, what are the policy levers? We know we've talked about jobs, we've talked about communities, we've talked about housing if it's relevant, but if it's not relevant, trying to avoid. In fact, these schemes can be hyper localized. I mean, what are some of the sort of the things that are being tried? You know, the sort of more specific things that are trying to be achieved by these schemes.
So I think probably what's worth us highlighting really are, like you picked up, there's a different focus, I think, depending on which of the councils are taking this kind of initiative forward. And what seems to be successful is where that focus is relatively narrow. So they've got a really clear, well-defined kind of set of priorities about where they want to invest and the type of investments that they want to make. And that kind of links through to them being able to deliver clear outcomes, really. So, you know, that they're from the start, they're being very, very clear and defined about how they're going to do it and what they want to get out of it. And then there's a clear kind of thread and a way forward to do it. In terms of the how and what that kind of turns into is, what we see is one of the most important tools is developing an investment strategy. So, you know, at the outset of this, what we've been supporting our clients in doing is defining exactly what their objectives are, where their priorities are in terms of growth, and what the areas of need are. Often that's what sits behind that is a bit of market research to understand demand, and often these funds are looking to kind of complement and enhance what the existing investment landscape is, rather than kind of looking to compete. So, you know, that kind of builds a good background context to what they're trying to do. And then that investment strategy is setting kind of criteria to enable decisions to be made about what to invest in and who to benefit from. And that's one of the most important things that we're seeing about, you know, the how they're doing it and what they're using to kind of get to a place where they feel comfortable that they can make decisions that are aligned with their own strategic priorities, really.
I suppose it's that classic problem. You don't want to cast the net too wide, because you don't want to be in a situation where it's unmanageable and you don't have very sort of you've got no clear framework. Because if you haven't got a clear framework, you don't know who to give the money to, you know, to be frank.
Exactly.
Whereas, and if it's
and
too
also
broad,
you're spreading the intervention thinly then, aren't you? You know, you want to maximise the impact on it, and like we've said, it's often in areas where they've already got growth potential. So, you know, you want to concentrate and maximise the impact you can get. And if the outcomes you're looking for is job creation into, you know, new jobs or safeguarding jobs, that, you know, you are focusing that investment in the places where you're most likely to be able to deliver that.
Yeah, and I think that's a really important point. You know, what we're talking about here is these investment funds not providing grants, not providing support to failing businesses necessarily to pick themselves up and all that kind of stuff. What it's about is really understanding what's good and what's strong, and really supporting that to help that drive growth, rather than supporting I suppose failing businesses, which is, you know, arguably where you know, the public sector has probably focused its investment in the past.
Yeah, I mean, it's an interesting area when you talk about, you know, looking at those the difference between supporting and developing the economy and supporting developing strong areas so that they can grow further, compared to, you know, trying to prop up failing businesses or trying to, you know, save jobs, which realistically, you know, you can save them for a year, but they won't be there for next year or, you know, 2 years. Especially in the sense that I'm sure you saw yesterday in the news that the new subsidy regime is coming into place, and so it seems like this is very much of its time. Because I won't don't worry, the information only came out yesterday, so I'm not going to grill you on the regime. But one thing I did think was very interesting about it is that this seems to be very of the moment, in the sense that we do seem to be moving away from the idea that, you know, interventions, you know, should be should be limited as much as possible, to the idea that interventions can be a good thing and can be a very, very clear way of, as you've mentioned previously, looking at things like levelling up. Now, it's interesting, thinking about how you were talking about the hows and talking about making sure you had a very clear investment strategy and a very clear criteria. I mean, thinking about that, what sort of criteria do you work, compared to maybe some that don't? I mean, is it about having a clear thought about where you want to get to and try and work backwards, or is it about identifying those good, strong sectors that want to develop, or is it about saying, okay, well, what do those sectors need and how can we fund it, or am I thinking about it completely the wrong way around?
No, I think it's more the latter of what you were describing there, Stephen, in terms of kind of, councils know in a lot of detail kind of what works well already in their communities, what their areas of strength are. They will have a council plan and a set of priority documents and policy documents that clearly articulate kind of the outcomes they want to get to, so that they want to overlay that with a strategy that looks to complement some of those kind of policy outcomes they're trying to achieve. And that's what we mean about the narrow focus. It shouldn't be trying to address all of those, but it may well look to address one or two of them. So what we see kind of coming through is you set some priorities in that investment strategy which align with the strategic kind of goals, but then the criteria is much more to do with if it's investing in businesses, for example, it could be the size of the business or the business stage that it's at. It's also often we're seeing more and more in alignment to the ESG criteria, so you're seeing that environmental social governance piece, and particularly I think a focus on not kind of judging that at the outset of an investment, but actually measuring an improvement in that ESG type policy for a business over the life of the investment. And I think a general view that if that business is improving in all of those areas, outcomes will generally follow. That will be seen to be a good and successful business, and the outcomes that the council is looking to achieve will often follow off the back of that.
So thinking a little bit more, we've talked about some of the sort of the policy areas. I mean, how are these schemes being structured? So are you tending to see guys sat in the council offices just administering these things themselves? When we've had to do things in a rush recently, and we think about the COVID business grants and all of those sorts of things, it's all been very all hands on deck. Are these funds being structured so that they're just part of council grant giving or council loan making, and it's all very within current structures, or are things being sort of hived off either into new departments in the council, or even actually just structuring them so there's a separate body or a separate fund that's actually administering these? I mean, it seems and I'm sure you'll jump in if I'm wrong, but it seems to me there's a bit of perhaps an expertise gap in how we might want to look at some of these things. So being able to get some external expertise in seems to be a good way of approaching these sort of things.
Yeah, the majority of the investment funds that we're seeing set up are being managed externally by a fund manager. And the reason for the council taking that approach, there's a number of reasons for it, really. There is that skills and capacity reason. There is that expertise piece. A fund manager not only has got their professional experience in managing a portfolio of investments, which is obviously an essential part of that, but they also have the relevant authorisations such as FCA accreditation that a council might not have. But I guess most importantly, they'll bring with them a network of investment opportunities that a council is unlikely to be able to generate itself, or it would take a lot longer to do so. And that's quite an important driver for, like you say, getting the fund up and off the ground as quickly as possible, bringing those investment opportunities forward. And an external organisation that already operates in those type of networks is going to be able to do that much more quickly than a council will. So they're kind of the main reasons for doing it.
But I think it's fair to say we do see a mixture as well. We see, we see local authorities setting up essentially loan funds where they're looking to loan into businesses and buying in either the legal, the financial, or the business expertise to support them in making those loans. I think one of the really important things is really understanding what your objectives are. And understanding whether actually you can meet those objectives through an internal fund or whether that needs to go out to an external fund. And as Laura said, some of the points around regulatory activity, trying to attract co-investment or trying to attract inward investment, which you may not be fully kind of briefed on, is really important. But then also understanding the governance that you need to support that, and often putting it out in a vehicle allows you to set the tone and direction, but the kind of you don't have to have a kind of heavy touch governance. Whereas as we all know, with some local authorities and some members, they feel that they need and want that control. So you see them holding the funds closer to them in that respect.
I probably would just add to that as well, I guess. You asked a bit about what our council's doing internally around this as well, and whether or not the decision to kind of manage the fund is internal or external. There seems to be quite a significant role for those kind of economy and skills business support type teams that are kind of nurturing investment opportunities in their local area. They will already have an existing relationship with a lot of the business community, and I think these investment funds are kind of rely on that network being brought and supported by the council as well, in terms of kind of investor readiness, getting those businesses ready to bring forward an investment opportunity, some support in them preparing for that, but also I guess signposting them to the different opportunities that are available for them to access finance.
I mean, it's interesting because mentioning about the about when we look to structure it so it's externally managed, and as you've mentioned, by a fund manager. I was really interested by Chris's point about governance, because I do find you've got fund managers with a lot of experience and a lot of ideas about how to do things, what a good investment looks like, and there might be a little bit of friction between the policy outcome that a council is looking for and where a fund manager's expertise has been in the past. So when we talk about governance and think about sort of the overview of the strategy, is it how do you structure it so you are ensuring that what the fund manager is doing is what you want? I mean, we've talked about setting the investment strategy, so they've got a framework to work within, but actually monitoring these things. What is there a clear process starting to come out of how it's best to monitor these things and making sure that they're actually performing the way that you want them to, and you're getting the policy outcomes you want them to?
Yeah, I think you're right to mention, Stephen, the investment strategy is a key part of that. That is, one of the main parts of the agreement between the council and the fund manager. But then also we are seeing, there's a requirement in terms of performance measuring and monitoring that the fund manager will report back regularly to the council in terms of the outcomes that they're meant to be delivering against. But also there is an overlay on that some of the funds are looking to kind of have performance monitoring targets that are linked to fee and performance of the fund manager as well in terms of delivery of those outcomes. And I guess it depends a bit on what they're trying to achieve from the fund, but there is the ability to kind of build in that to incentivize the fund manager as well.
But I think you're right to identify it, Stephen. I think certainly in the ones that we've seen up and running, actually that kind of benefit realization and monitoring that benefits over the life of the kind of fund is probably the bit that gets forgotten. Once the fund starts going, everybody's kind of feels like the work's done, and actually that monitoring and performance management and is the fund meeting its objectives is often kind of I suppose pushed to the back a bit.
There's also there is a time lag between an investment and benefit realization, and that expectation needs to be built in and understood from the outset, really. Yeah,
I mean, I recall with a client, sort of they're doing some work for them and looking at a performance report of did they get their outcomes, and how many new jobs did it create? And I always felt it was actually quite a difficult thing to measure, because well, if you're looking at sort of, is it as simple as, well, they employed 5 new people? Well, they could have employed 10 if they were all half part-time. So sometimes it can be a little bit difficult to make sure the numbers are really reflecting what you want them to. I suppose coming towards the end is, and thinking about some of those real life examples and what it's shown you. I mean, obviously, we've talked about things, how you can structure things, but think about a project you've been involved in. Where have you seen some really positive outcomes, and where you've seen some success in the council's objectives really clearly being outlined and put into place?
If we'll describe an example of one fund that we're working with at the moment that's still at kind of launch stage, but actually is quite a good example of how to tailor the intervention, I guess, to reflect the need and demand in a local area. So we're working with one council that undertook some detailed market research at the beginning of the pandemic, really, to understand what the likely impact COVID-19 was going to have on its local community in terms of jobs, and particularly the sectors in which it worked upon. And that market research really gave quite a clear rationale for the council needing to take some form of intervention to mitigate that impact, and to try and support recovery coming out of that. And what that research did is identified kind of 3 main areas of need, which would probably bolster the best chance of recovery. And from that, really, what we've done some work with the council doing is designing a fund that can respond to those 3 areas of need, really, through a business case process as well, so building up the story in levels of detail, the strategic alignment, evaluating different options to give them confidence that the kind of preferred way forward is robust, some financial modelling so they understood the risk, and helping define the governance arrangements that you've rightly flagged as well. And what that's resulted in really is a fund that is slightly more complicated than maybe you might expect at the outset. So it's kind of got an umbrella focus on the region, but it's got 3 pillars of investment underneath it, and each of those have got a completely different focus, really. So one is on established growing businesses looking to bolster the local existing and successful economy. The other is on small businesses, local enterprises that might be emerging out of the pandemic, where people have kind of changed their direction, have got new ideas for kind of job creation that are coming forward. And then alongside that, the opportunity to support growth through property and infrastructure investment as well. And what they've been able to do is kind of design a fund that operates as a portfolio with those 3 pillars underneath, and each of those pillars will have different scale of investment, different investment priorities, different outcomes, but it's working as a portfolio approach to kind of manage the risk and reward across all of that. And it's promising, some really good outcomes in terms of job creation, increasing GVA, and supporting a number of businesses in their local area that they think is going to be significant in their recovery plan.
Great. I mean, we just, we're almost out of time, so this will be a very, very quick last one, which is just to say, we've talked about this as really, really positive, really, it's all sounding great, but I presume there are some challenges around putting these things into place. I mean, in your experience, and I am just looking at the clock, so you won't have to give loads of challenges, just a quick one, which is just, what would you say has been the main challenge of setting these things up? Is there sort of an inertia? Is it finding the opportunities? Is it getting clients excited about it? Is it getting internal buy-in? What's the sort of thing that you've found has been prevented councils from moving as quickly as they would have liked?
Sorry, Laura, I'll just jump. I think from my point of view, one of the big things is the council's fiduciary duties to manage its financial resources, and recognising that a fund such as this, in making investments in businesses that potentially could fail, it's getting over that barrier of well, what happens if we lose money on this? you know, what does that look like and what does it mean to us? And Laura picked on the portfolio approach to manage that, and that's really, you know, what we kind of advocate and advise. But it's, you know, it still lingers there, and I think it's an important point. You know, local authorities look after our money, and you know, you don't want to see them losing it on a punt.
Well, great. Well, thank you very much. I think that's a great place to end to end it. Personally, I found that really quite interesting and really helpful. I've certainly understand this a little bit better than I did previously, and understand some of the options and some of the pitfalls, etc. So I will just say thank you to you both for joining us. So thank you.
Thank you for joining us.
And thank you to everybody for listening. Next week we will be talking about IFRS 16, everybody's favourite subject, and speaking to Innovision about how we can learn lessons from the private sector who have already put IFRS 16 into place, and apply those to local government. So I'll just say thank you again to Laura and Chris, and to thank you all for listening, and see some of you again next week. Thank you.